All right, we're live. Dude, NASDAQ just falling, just like we said it was going to yesterday. S&P falling, just like we said it was going to yesterday. Gold and silver bouncing from the supports that we laid out. Pretty insane, to be honest with you. Bitcoin kind of just stuck in between, I mean, it did catch a nice bounce. It did catch an absolutely nice bounce, and it's bouncing from one of the supports that we laid out yesterday as well. Just saying. So we are seeing the NASDAQ and potentially even the S&P as well starting to trend down. Okay, so in this video, I'm actually going to show you a really good trend following strategy to get in on those trending markets with like minimal, and I mean minimal risk. Okay, it's going to be absolutely insane, super epic, in my opinion, right? We'll see. We'll see if you think that it's good. We'll see if you think that it's helpful. And we'll kind of take it from there. But yeah. I mean, the trend following strategy, it's going to be good stuff. We'll just call it what it is, right? The trend following strategy is the way to get in. And it just is what it is. It's a very good strategy, and I'll show it to you, right? We're going to use the indicators to show you that strategy. Give me 1 second. I'm just lining a couple of things up in the background really quick. But we're going to use the indicators to show you that trend following strategy, because they're the things that absolutely crush it in the market, that basically tell you exactly how and exactly where to get in on this stuff, okay? And it's super cut and dry. It's a super easy, what I would say, it's super easy to spot once you see the trend break. I'm going to show you where the trend breaks. I'm going to show you how it breaks. I'm going to show you everything that you need to know, okay? Obviously, we're going to go over all of the analysis for gold, silver, Bitcoin, ES, NQ, all of them, right? And then we're also going to take any requests. Anybody has something that they want me to look at, just let me know in the comments section, man. It's very, very hot in Florida, so I will be sweating. It's not because we're nervous. It's because it's hot as hell down here. So go check out the Tampa weather. You'll know exactly what I'm talking about. Now, let's talk about gold first. All right, we always talk about gold first, I know. If anybody has any requests, put them down there in the comments section. And the sun is going to keep, going up and down and up and down and hiding behind clouds. So I might have to go back here and close these curtains so that it stops messing with my lighting. But, it is what it is. So let's talk about gold. Boom. Bang. All right. So this is gold in a nutshell, right? And this kind of shows you the trend following strategy in a nutshell in and of itself, right? Boom. Couldn't get in there. Could have got in here. Right? Could have got in here, right? Could have got in here, here. So it kind of gives you the trend following strategy in a nutshell by itself, but we're going to do that. That's going to be like a dedicated portion of this segment, is like showing you how to catch the trends, whether they're uptrends or downtrends, shifts in market structure, things of that sort, right? So let's get into it, and I'm going to show you what's going on with gold. So we actually gave out this trade on gold, okay? And you got your perfect trade, man. You got your perfect trade. The triangle into the boxes. All you have to do is have the indicators in order to be able to see this. We gave this trade out. We also gave this trade out back here. You got the test of the order block, boom. One profitable trade. This one's a higher probability setup, in my opinion. Boom. Right? The triangle inside of the box. It's literally that simple, man. It's literally that simple. Okay? We're going to zoom in. We'll show it to you. These indicators are very dynamic also. So like when you zoom, give them a second to do their thing. It dynamically moves your chart around so that it shows you everything that you need to see based upon whatever you're zoomed in on your chart. So as you can see, within 5 seconds, after I zoomed in, it zoomed me, everywhere that I needed to go. I accidentally deleted the order blocks indicator off of my chart. Okay, so this is what we saw. Triangle into the box. That's all you need to see. That's like you're good. That's a really good trade. Okay, that is a really good trade setup. And guess what? You did not get your swing failure pattern You did not get your exact swing failure pattern, or you did not get your exact bullish divergence, but the bullish divergence just makes the trade better. It's not a guaranteed. You have to have this as a criteria. So once you get that, you can literally just enter on the next candle, place your stop loss under the wick of this candle, or you can place it outside of the order block. Okay. Now, what I do is I actually wait for it to confirm, then I get in afterward, and then once we get into profit, I start trailing my stop up. Okay. So I won't enter the second that this happens, right? But what I'll do is I'll enter afterward, after I've got my confirmations, because it's a higher probability setup. So we are bouncing from the support that we were talking about yesterday being a key level of support. This is where your 1 hour, your 15-minute, your 5-minute, and your 1-minute lows were and are actually there. That's where they're at right now. Second to that, that is also where you have the 30-minute and the 4-hour order block that just got hit and mitigated by 70%. But the 30-minute order block that actually has like almost 3,000 in contract volume on it, it's only been mitigated by like 1%. So it's likely that you could bounce from this 30-minute order block all over again and take this trade all over again. That's all I'm saying. And actually, we had somebody that came in into Alpha Intelligence's Discord yesterday and was talking about, actually, I might be able to show you. Was talking about this right here. Can I move this over? Will that work? I don't know. Let me see if you can see this. Nope, I gotta share it. Here we go. Screen share. There we go. Okay. Entire screen. Boom. Yeah, this guy right here said, I got signed back up for the indicators. Overcame a slight technical issue, but figured out a workaround. So glad that I have them. No indicators is like driving at night without headlights. He has to resort to using YouTube experts that use trend analysis and tell me that a stock in crypto may go up or may go down. Super unhelpful. Drew, on the other hand, provided some great analysis today during his YouTube live stream. And look at this. By the way, I took a profit of $1,100 today using Drew's levels on silver and Bitcoin from the morning video. And now he's back in on the dip. Pretty insane, dude. That's actually really nice to see. I love to see people that come in and his first day, he's actionable. His first day, he's getting money. Who else can say that, right? Like what other indicators can do that for you? I don't know. I don't know. But in any case, bang. This is the level that we were talking about yesterday. This is the exact level. Now, this is probably your best level of support right here, right around 43.50, okay? And right now, we're getting squeezed in between these two areas. Now, this order block set right here only has 900 in contract volume. This has 2.7K, whereas this order block set has 13K in cumulative volume there, which is, in my opinion, a higher level of support. Okay, that support is going to be very similar to the resistance that is right up here. We got to zoom out just a little bit so you can see that resistance, but that resistance has got about 14,000 in contract volume on it. Okay, so we want to make sure that if we catch a bounce here, we are very cognizant of what is above us. Okay, what's above us right here is that 45-minute order block that has not been touched yet. Okay. And what we'll be looking for is a reaction here, right? Are you going to get a slight rejection, a pullback, and then a push up to then eventually make your way all the way back up here to about $5,000, okay? Right around here. And you'll see it pop up here in just a second. But the road to 5K is paved with very little resistance, at least on gold. So we're looking to get through 45.50, and then we're looking to get through 46.50, and then it's kind of like you're going to 5K, right? Now, there's an incredible level of support here, in my opinion, which is right here, right? 15.5K in contract volume, right at about 43.50. And look at all the support that you have all the way down to 4K, right? That is all just support right there, right? An insane amount of support. And then you saw that there's very little resistance all the way up to 5K. So, I mean, this thing, it could go. That's kind of my point. It could go, all right? And I'm going to show you how you can, kind of catch these trends or whatever. But I mean, look at all the times that you could have gotten in on this trend, right? You could have gotten in right here, right? You could have gotten in right here, right? Could have gotten in right here. Could have gotten in right here. Could have gotten in right here. You can get in right here 2 times, right? And now you're starting to kind of like tear off. So I would be looking for a retest of this right here to then catch that bounce and make that next move up, because you're kind of losing a little bit of steam. You got to take some liquidity here, man. And that liquidity, most of it is going to be right there and then right here. 106,000 in cumulative volume. You're probably not going to go under 4,200 anytime soon, man. Just being honest with you. 4,200 is like the support of supports. Okay. So does anybody have anything that they want me to look at? Does anybody have, let's see, let's remove this. If you have an asset that you want me to look at, there's almost 24 people on this, right? On all platforms. If you have a level that you want me to look at, drop it in the comments section. We'll look at it. But we're going to go through silver. We're going to go through Bitcoin. We're going to go through ES. We're going to go through NQ, which is the S&P and NASDAQ. And we're going to do silver next. Okay. So silver is actually bouncing from the support right now. As well, silver bounced from the exact support that we were talking about. Okay. This is a critical level right here, right? You've got 700 in cumulative volume here. If you lose this, you're coming down here to about 64 bucks. All right. 64 bucks is a little bit, higher support of a level, but your real support is right down here at 62.50. And then you've got a little bit of support here at 61.65, right? Now, ultimately, you do not want to lose this level right here. In my opinion, 63.65-ish. Why? Because that's where your 1 hour market structure is. And you want to keep the 1 hour and the 4 hour and everything under it, for that matter, in an uptrend. Now, you've kind of seen 30-minute, 5-minute, 1 minute are all in a downtrend right now. So could that be the thing that pushes us down into this level, or even pushes us down here where we get a swing failure pattern, right? Which is the nice little triangle. And we get our nice little boom and boom divergence, right? A bullish divergence on silver. Okay. Yeah, it definitely could be, but you've got a little bit of resistance up here. It's not much. I'm going to be honest with you. Like if we look at this resistance, it's 500 in contracts, 550. This one's 276 and this one's 355. So you've got basically like 1,000 cumulative contracts in here of resistance. And honestly, that's not a lot of resistance, because once you get through that level, you break 67, because 67 is your level. That was our highest level of resistance. And we cracked it, right? We cracked it right here, just tapped right onto it. And if you get up above 67, dude, you're coming up to probably 69.50 before you receive any type of real resistance. And you're probably going to get up into about 70 to $73.50, right? This is a 10 order block set with 80,000 in cumulative contract volume on it. All you have to do is have the alpha structure suite by Alpha Intelligence and the order block suite by Alpha Intelligence. And as soon as you crack this, you're longing until about $70 on silver, man. Literally. Is XAU USD about to give a better entry opportunity? No clue. No clue. I don't know what a better entry opportunity would be, Shafiq. This is your opportunity right here. I mean, you come back down here and you tag into this order block right after you get that SFP. I mean, there's your entry opportunity, right? So I would say yes. Excuse me. I would definitely say yes. You're going to get your opportunity on XAU, which is gold, right? Now, for silver, though, you're probably going to blast through this. In my opinion, you get up above 67, you're longing to about 69.50. that's your profit target, because you're probably going to get a little nice pullback, and then you're going to start working your way into this big, massive 10 order block set, which is hundreds of millions of dollars right here in contract volume. How do I know that and no one else knows that? Because I have the alpha intelligence indicators that tell me that I have 80,000 in cumulative volume here. Dude, when I say 80,000 in cumulative volume, I'm going to show you what that means. It's like 2 billion in volume, dog. It's like 2 billion in short volume that was accrued at this level right here from $69.40 to $73.70. So in basically a $4 range, you had $2 billion worth of institutional short volume. Now, here's the thing. This is my public service announcement that I give every single video. There is only one thing in the market that matters, and it is volume. It's not trend lines. It's not freaking SMAs and EMAs and moving average crosses on lagging indicators. It's not MACD. It is not a freaking bull flag, dude. It's not arbitrary pivot points. It is volume and the velocity that that volume enters into the market. Because again, we are the 5%ers. Only 5% of the trading volume that happens in the market on a daily basis happens by people like us, retail traders. 95% of the volume that comes into the market every single day on a daily basis happens by the institutions and their algorithms. 95% of the volume. So do you really think they give a crap about our 5%? No. So why am I even paying attention to the 5%ers? Why am I even paying attention to a trend line or an SMA or a bull flag or a bear flag? Like, you go into Goldman Sachs and tell them, hey, there's a bear flag that seems like it's about to break out on gold. You think it's going to go down? And they're going to be like, what? Bear flag? What are you talking? Get this guy out of here. They're going to kick you out. They're going to kick you out. They're going to laugh at you and anybody that you brought with you. So don't bring people that you like if you're going to do that. Because they're going to laugh at you. They're going to say, dude, we move the markets by mathematics. We move the markets by algorithmic calculations. Okay, that's how we move the markets. So why am I paying attention to the 5%ers when I need to be paying attention to the 95% that moves markets with mathematics and calculations? That's my public service announcement and my tirade for the day. If you want to pay attention to the institutions, you have to get the alpha intelligence indicators. It's literally the only indicator suite in the entire world that gives you the data that I just showed you, which is where the institution's positioned, first and foremost, in the actual volume that they positioned, right? As you can see right here, literally tells you there's on 1, 2, 3, line 4, the cumulative volume of this entire order block set is 80,000 contracts. You times that by how much money it costs to tie up a gold or a silver futures contract, which is $20,000, $25,000 overnight, and you have over 2 billion in volume that happened there. That's not retail, okay? 100,000 in volume, 500,000 in volume, maybe that's retail, right? But 2 billion, that's banks telling you we want to be short, okay? So alpha intelligence, again, is the only indicator in the world that tells you where the institution's positioned, the exact prices, the exact price ranges, the exact time frames that that volume came in on, and the exact volume that came in on those time frames. You cannot do any better than that type of analysis. There's a reason why it works so well. Okay, there's a reason why it works so well. And whenever you enter these little boxes, you get your reactions. And when you enter these boxes, you get your reactions. And when you enter these boxes, you get your reactions, right? Look at that, called the bottom. There's a reason for that, okay? So in any case, kind of just went off on a tangent. Bang, right there. Shafiq said XAU is bouncing right now. He got in on time. Nice. I dig it, bro. I can dig it, man. That's what we want to see. We want to see it come into this order block set and then start to catch a nice little bounce, right? Now, remember, as soon as you get into profit, you just start trailing that stop, baby. Just start trailing that stop. So ultimately, what do we need to do? Well, we need to uphold, in my opinion, this level right here, 62.50. Call it 62.50, okay? You got to uphold that. Second to that, this is on silver. Second to that, once you break up above $67, the 1 hour, the 4 hour, the 15-minute, and the 30-minute highs, all you got to do, enter long. Your target is this order block set right here and this order block set first, right? So this is your target, basically $69.40 or so, right? So you're targeting almost 70 bucks and you're just waiting for the rejection. You're waiting for the pullback and then you're waiting for another entry to go long. That's what you're doing on silver, essentially, right? It's not that hard. It's pretty simple. Let's talk about Bitcoin though, man. Bitcoin got the bounce from exactly where we were talking about. We were talking about this yesterday. Obviously, it had already bounced from there when we were talking about it, but we did give a trade out down there. We did give this trade out in advance. You got to catch that trade like 3 different times. Once, technically twice, 3, technically 4 times you could have caught that trade. Now, did you get the perfect trade every time? No, this was the perfect trade right here. When it went into the order block, right? You got the triangle inside of the box with the bullish divergence. That literally called the bottom on Bitcoin. It literally called the bottom on Bitcoin. Quick caveat. Does that mean it's the bottom forever? No. But does that mean that it was a very key critical bottoming point where you were going to see a big move up? Yes, that's what it called. It doesn't mean that this is the absolute bare minimum rock bottom and we're never going to see 62,000 ever again. No, that's not what that means. It means you're about to get a massive reversal and you're going to make big money off of that reversal. And big money you made. Big money you made, right? Look at how far Bitcoin went up. 5.5%. Do you realize what your risk to reward on this would have been? Let's say that you didn't even enter here. Let's say that you entered after the SFP candle printed, right? And you didn't even get the perfect entry when it touched the order block. Let's say you entered after the SFP printed or you entered right here, right? You have a 6.5x risk to reward. No problem. Absolutely insane. And that's just if you would have entered when you got the retest right here, right? That's insane. Or you could have just entered on the next candle when that SFP printed. Now your stop loss is right there. It's that simple. Like these indicators legitimately make it that simple. I can't make it any simpler than that. Triangle inside of a box. You enter when the triangle happens inside of the box. You place your stop loss either under the wick where the triangle is or outside of the box. It's that simple. I can't make it any simpler than that. Let me know if you think that's not simple enough. Now look at Bitcoin. What we were talking about yesterday. We got a lot of support here. I don't think we're necessarily going to be moving down here, right? Boom. You smacked into it right here, pushed up. You smacked into it right here, pushed up. And then you smacked into it right here and then pushed up in a big, big, big way, okay? This stuff does not play around. This stuff does not lie. Institutional volume does not lie. Now, a lot of people are probably like, oh, look, it's a bull flag. I'm going to show you why bull flags suck. You didn't get in until here. We got in on the bottom of the bull flag. What are you talking about? Screw it. Like a bull flag. What are you talking about, bro? Like, huh? Look, it's another bull flag. It's another bull flag. This is the bull flag, right? Well, you didn't get in until here. We got in at the order block test. Caught the bottom. That's all I'm saying. So like stop worrying about bull flags, bear flags, head and shoulders, patterns, cups and handles and stuff like that, dude. They don't work. They might work, but I'll show you why they work. And it's just because some of their stuff coincides with the actual institutional volume that drives the market. That's it. So ultimately for Bitcoin, this is all we need to see. Okay. We're going to zoom out a little bit. Because it's going to get wild for Bitcoin now that it's moving up. It's got one real resistance. It could go like pretty decently high. It could go parabolic almost, right? Here's the resistance, man. 1 hour highs, 4 hour highs, okay? And then you've got a 2 order block set here with only 960 in volume on it. That is not going to be huge resistance. This one's got 3.5K. So my point, if you crack this level right here, 67.6, with a 4 hour candle close, you've now shifted market structure to an uptrend on everything from the 4 hour chart down to the hourly or down to the 1 minute chart. That's where you look for the pullback and then the push up to about $70,000 to $74,000. Okay. 70,000, you've got a little bit of resistance here at about 71, right? But ultimately, your real resistance starts coming right up here from 74 to about $81,000. And the only thing that needs to happen in order for you to get there is this. Boom. That's it. You got to get up above 67.6, and then you're looking to carry it all the way up to 74, and then ultimately about $81,000. Sound good? Just saying. Doesn't sound horrible. And then you've got massive support all the way through here. Let's zoom in. You've got two massive supports. You've got massive support all the way down to $58,000. These are huge supports, but your real big support is right here. Let the indicators do the indicator thing and zoom in. Yep, right there. Okay, so long as you uphold, in my opinion, 62.7, and really, you just got to stay up above 62.2. It ain't going to matter. Bitcoin's going to be moving up. And that's just what it is. While everybody else, now I know there's a lot of people that are calling like bull run on Bitcoin and stuff like that. I'm not calling bull run on Bitcoin. I'm saying if we uphold this level and then we break this level, here's where we're going. If you lose 62.2, you're coming down to $58,000 on Bitcoin. Just is what it is, right? I don't care which way it goes, man. Traders truly do not care which way that the markets move. You're going to make money both ways, right? You're going to make money either way. You can make money shorting, you can make money longing. I just need to know where the institutional support is, where the institutional resistance is. And I don't say institutional lightly. I don't say it as a buzzword. I say institutional because I'm tracking the institutions. I am literally and legitimately tracking the institutions. Here they are. How do I know that? Because I know the velocity of volume that comes in, and mathematically how that pertains to, is that retail money or is that institutional money? It's a simple mathematical calculation. It's very similar to like trigonometry, right? Volume, right? And velocity. That's it. That's it. It's very similar to trigonometry, maybe a little bit of calculus. I don't know. It's just math, dude. Matter of fact, raise your hand if you've ever traded over $5 million of your own money in a day, not using leverage. Raise your hand. No one's going to. It's because retail doesn't trade that big money. So when you see that big money coming in the velocity that it's coming in, that's why these order blocks are here. Okay, so hopefully that makes sense. Now, let's talk about the S&P. So the S&P we were hoping was going to come back up here for the 1 hour highs and then tank out. We didn't get it. We didn't get it. We came close. We came close, like within dollars of it, but you didn't get it. It is what it is. Sometimes you get them, sometimes you don't. I'm going to show you how to catch this trend though, with using just one indicator, two indicators. Okay. Now, right here, okay, is where we broke market structure to the downside. Okay. Right here on the 1 hour, all the way to the 1 minute charts to the downside. Okay. This is now in a downtrend. Alpha structure tells you that. That's all you needed to have, alpha structure. And it tells you right here in this trend status box. You don't have to do anything. It just does it for you. Okay. So How could you have caught this trend? Well, once you see market structure shifting to the downside, now you don't have to worry about reversals, swing failure patterns, which is what those triangles are, and bearish divergences, looking for reversals. Why? Why don't you have to look for reversals anymore whenever market structure has now shifted to the downside? Okay, I'm going to show you. Well, I'm going to tell you first, and then I'm going to show you. Because when you're looking for the reversals, it's because you're looking to time the top, time the bottom, and find the reversal point to go to the opposite direction. Like, for example, on S&P, you're looking for the swing failure patterns, those triangles coming in on alpha structure, on the alpha intelligence indicators, and the, bearish divergence at the top so that you can catch the top and ride it down. You're looking for a trend reversal, right? Because the S&P was in, this is what we were talking about yesterday. Hey, the S&P is in like a full-on uptrend right now. It cannot stay in a full-on uptrend forever. And look at it now. Literally half of those time frames have already shifted to a downtrend when we were talking about this entire thing happening yesterday, right? So let me show you how you can jump in on the trend. Because now you're not worried about catching the top or catching the reversal. Why? Because the reversal already happened up here. Right? Now it's reversed and you broke market structure to the downside right here on the smaller term time frame, lower term time frame charts like the 5 minute, the 3 minute, the 1 minute, the 10 minute, the 15 minute, stuff like that, right? So what are you looking for? All you're looking for is entry points, man. Now you're just looking for entry points. Did you catch the absolute top? No. Did you catch the absolute top? No. But once you got your confirmation of market structure shifting to the downside on those smaller term time frames, all you had to do is come down to the smaller term time frame and look for order block sweep, man. That's it. Order block sweep. What did it do? It created the order blocks right here, right? I think we can all see it. I'm going to zoom in on it here in just a second. All you had to do is see the order block and then see price tag back into the fair value gap of that order block. Now you're in. And then, dude, look at how easy this is, right? You enter here. You're not worried about swing failure patterns. You're not worried about bearish divergences. Why? Because we're already in a downtrend, right? You enter here, you place your stop here, and you start trending, okay? This is how you catch the trend. Let me show you what this position would have been. You enter at the bottom of the fair value gap of that order block. You place your stop loss outside of the order block. Look at how far you would already have caught this trend down right now. You'd already be at a 16x risk to reward ratio on this just with where price is right now. 15x risk to reward. Absolutely insane. 15.2x risk to reward, okay? Meaning that now by just catching that one trade, just catching that one order block, for every $100 that you risked, you've now made $1,500 in a day by just knowing this one thing, okay? By just having this one indicator, right? Pretty insane. I'm going to give you a second place where you could have gotten that. And look what your stop loss was. Your stop loss was $6 on a $7,800 asset. Let's see how close that stop is. It's negligible. It's like 0.07%. That's how close and tight your stop loss was. If that's not pinpoint accuracy, I don't know what is. Now, let's take this off of here. You got a second shot right here. Boom, right? And look how tight your stop could have been on this one. $4. Let's run it down. You caught the trend here. Let's run it down to where we're at. 19x risk to reward. For every dollar that you risked, you made $19. For every $100 you risked, you would be already in profit $1,900. For every $1,000 you risked, you would have already made $19,000 just where price is at right now, and you would have 100% caught the trend. Absolutely insane. I'm going to give you another one here in just a second. Could have caught the trend 3 times on this. Right here, and again, right down here. soon as you come into the order block, well, the fair value gap, technically, you enter. What's your stop on this? $4.75, and you're already up 4.5x risk to reward. Is this clocking to people? Like, is this clocking to you? How you can catch these trends? Does this make sense? Let me know in the comments section, because it's literally, I know that it's hard to believe, but it truly is that simple, right? Like, it truly is that simple. And you can lose on this and lose such a small amount of money, like $4 per contract is your stop loss. You know so quickly if you're wrong that you lose like the least amount of money possible. It's so simple. You're literally just catching the trend and trend following. It's literally that simple. And you just go down to those 5-minute charts, 3-minute charts, 10-minute charts, 15-minute charts, whichever one you want to pick, and you find that entry, man. It's very simple. And all you got to do is look for a box. Just look for a box. There's 3 of them. One here, and then one right up here. Watch. It's going to pop up. Just got to give the indicators a second to work. And one right there. It's literally that simple, dude. Like, does this make sense to people? I don't know, man. I don't know. And it never really stopped is the point. It never really pulled back. It just kept going. And when it pulled back, it just pulled back straight into an order block. Boom. Right? Just pulled back. It pulled back here, created an order block, pulled right back into it, shorted it, pulled back right here, stopped, kind of just like price just kind of stopped here, right? Got a nice push down, created another order block, and then just pulled back right back into it. Is this clocking? Like, I don't know, man. Like, how many people do we have on here? We got 36 people on here. Dude, let me know if this makes sense to you. Like, is this not literally the cheat code of cheat codes? Not only can you time the tops and bottoms of markets from like a market structure perspective and find the bottom on gold, silver, Bitcoin, S&P, NASDAQ, whatever. Find the bottoms and tops for like your long-term investment portfolios on stocks, cryptos, metals, ETFs, whatever it is, right? You can time the absolute tops and bottoms. We just showed that in the gold segment. So if you didn't see that, go back. The indicators picked out the bottom on gold and they picked out the bottom on silver perfectly, by the way. And then you can time the tops and catch the trend after you've got the confirmations like what we just did. It's very low risk. Like, what was your risk? $5 after the market had already turned and went into a downtrend, and all that you had to do was watch alpha structure. This right here, this is all you had to do was watch this thing right here and see when the 1 minute shifted, then the 5 minute, then the 15 minute, then the 30 minute, the 1 hour, right? And you know you're on the right side of the trade because you're in shorts from here, you're in shorts from here, you're in shorts from here, right? I mean, you could have caught this entire move down. So let's talk about where the S&P has support and where it's going now, because there's some seriously critical support. Right here. Let me get this off of the screen. Your biggest support is going to be at 76.50. There's almost 1 million contracts in volume here. Okay, there's almost 1 million contracts in volume. There's 500K here. There's 300K here. That's over 800,000 in cumulative volume on this, right? This is just on micro ES, right? This isn't even the big ones. Okay, so let's calculate that. $1.2 billion in volume. That's just on the micros, the E-minis, right? Bro, imagine what the volume is on the actual, like, ES1, right? Which is not the micros, okay? Imagine what that volume is. 1.2 million here, or 1.2 billion here is an insane amount of volume. In literally a 76.30 to 76.80 in a $50 range, they went $1.2 billion in longs. That's nuts, right? Then you've got this. That's about a $500 million in longs right there, maybe 600 million in longs right here. As soon as you lose 75.50, it's over. You're coming down to 73 hundo, period, right? So this is your support. This, if you took the shorts up here, if you took the shorts here, if you took the shorts here, even if you took the shorts here somehow, this is your target now. Your first target was like right around, I believe it was like right here, because there was about 300K in contract volume right around that little box, right? But it just, dude, it just disrespected that box so bad. And now it's heading down to where the real institutional volume is, which is about 1.2 billion, okay? You've obviously got resistance here. You've got resistance here. You're going to have a little bit of resistance up here, right? So once you hit that support, you know where you're going, right? You're coming right here. You're coming right here. And then you're coming right up here for these 1 hour, weekly, 4 hour, 12-hour highs, okay? Does that make sense? Hopefully that makes sense to people. Let's get to NQ, where again, the indicator's called the absolute freaking top. This is how easy it is, man. Triangle inside of the box, pointing in the direction that it's telling you to trade. The next box down is your friggin' target. It's that simple. It is legitimately and literally that simple. It is that simple. Okay. Here's your trade. Boom, boom, target. I'll set the trade up for you so you know exactly what I'm talking about. But dude, absolutely insane trade, right? Let's say that you enter, you got to enter on the next candle, right? Because we know that the SFP doesn't actually print until the candle closes. So you enter on the next candle, right? You've got one of two places you can place your stop. You can place your stop outside of the wick, which gives you a ridiculously tight stop, or you place your stop loss outside of here for about an $83 stop loss on a $30,000 asset, right? 10x risk to reward on this. 10x risk to reward on this, right? Pretty simple. Massive, massive support here. 818,000 in contract volume that's happening right here. By the way, before we go any further, if you have an asset that you would like for me to look at, please drop it in the comments section. I'd be more than happy to look at like 1 or 2 assets that are requested from people. Throw me for a loop, man. Throw me for a loop and say like, dude, Drew, I don't think the indicators and your methodology is going to work on this. I want you to try and throw me for a loop on this. Look at this. You come right into this order block set, called the bottom, then called the top, and it's sending you right back to where you were looking for the entry. Called the bottom here too. SFP, right? This is how you can kind of see how these things play out. Triangle inside of the box pointing down. Target is the box, right? The next box. Triangle inside of the box. All the way up. Perfect exit. It even called the absolute top for you to exit from this long and then just enter the exact opposite trade to target the exact same level, basically, right? Then you were able to get in here and ride it up, right? You were able to take a swing failure pattern short here. It's that simple, man. It's really not that hard. You have the bearish divergence here, right? Boom. That's why you would take this trade, because of the bearish divergence, not just because you got the triangles. You need the triangles to come with the bearish divergence. I'm not sharing. That's my bad. I do that all the time. I'm the worst streamer in the world. The reason why you would have gotten in on this trade, triangle in the box, called it all the way to the top where you got the next triangle in the box to then just flip the exact opposite direction right back to the support, right? Right back to the support. It's perfect. It's perfect entries, perfect exits every single time, right? Perfect entry, right? You enter right here, probably. Boom. You get your confirmation. You enter right around here. You take it back all the way down. Now you're already out, right? And you can just front run this. I would just sell it right now. What's the difference in between selling here and selling here? A few bucks? Fine, I'm taking my profits, man. Taking my profits every single time. Then called the bottom here, went right up. Guess what? You got the swing failure patterns, double swing failure patterns. You got that short right here. Why did you get that short? Well, it's not just because of the triangles. It's because the triangles came in conjunction with this. SFPs, triangles, right? Right before the box with the bearish divergence. They're pointing down, telling you market is trying to reverse here. You take the short, you trail your stop on the way down, and then your ultimate entry is right there. Knowing in the back of your head this entire time that this happened right before the block, and we would like to see it happen inside of the block. And so you see the difference in the reactions. This is a quick reaction, right? This is a drastic reaction. This is a drastic reaction. That's the level of confluence that I'm talking about. That's why I break it down to such a simple kind of like, hey, if you see that triangle come inside of that box pointing a certain way, and it's coming with a divergence to the opposite direction, one of the highest probability setups you're ever going to get, and it's going to be a big move. That's what happens. You saw it on the NASDAQ just right there. Now, if you get those triangles popping up and it is coupled with a divergence in the same direction that the triangles are pointing, that's also good. It's just not as good as the one where it comes inside of the box, right? It just means it's probably going to be a smaller move. That's it. Now, let me let you in on a little secret. When you get this, and you basically what this is telling you is that you're swing failing the old highs, so you're failing to make a new high. What's the most logical thing that happens here? Well, you're coming for your lows, right? So your target is going to be the time frame lows. So where were the time frame lows on this? They were right here. You're looking to bring it down to here, but you might not get there, is my point. And that's why on these swing failure pattern ones with the opposing divergence, just the triangles with the divergence, you just trail your stop into profit, man. That way you're guaranteed to make money no matter what, even if it does stop short of the lows, right? The lows are down here. It went about halfway there, fine. And then you got your perfect entry, which is this one right here. You get the triangle inside of the box pointing down, and guess what? Highs are going up on price. Highs are going down on RSI. You literally got the triangle inside of the box with the divergence, bearish divergence telling you to short. It's that simple. Same thing happened here, right? Except for it was for the opposite direction. Massive moves, okay? So does all of this, like, let me know if I'm losing you on anything, but like, I'm trying to break this down to the easiest possible way that anybody can, like pick these things out. Obviously, again, you need the alpha intelligence indicators to be able to pick these things out, but you can get them. You can literally try them for $7 for a week. If you're anything like this guy, he made $1,000 on his first day using them. I'm not saying you're going to make $1,000. I'm saying he did. He literally paid for his indicators for like the next 4 years. That's insane. That's insane. So in any case, these indicators literally, you can try them for $7. I think they're a non-negotiable tool that anybody should have in their bag. If you don't have these and you're not trading with them, you're at a huge disadvantage against people like me, because I literally, it takes me 5 minutes to do my analysis on any chart. Give me a chart, drop something in the comments section. I'll continue to yap until somebody gives me something to chart. Drop a chart in the comments section that I didn't just do charting on. I will run you through the analysis in less than 2 minutes. All of it, the whole thing. From an institutional perspective, from a smart money perspective, from a SMC, ICT, anything you want. I'll run you through the entire analysis. Give me one asset, bro. Just one. One asset. Just drop what in the comments section. Something you want me to look at. I will literally prove it to you right here and now. Right? I will literally prove it to you right here and now. Period. Nobody's going to drop anything. Nobody wants to challenge me. Nobody wants to say, hey, Drew, I don't think you can do it. Come on, man. Somebody give me something. Somebody give me something. There's like 40 people on this stream, man. It's like 40 people across all platforms. There's more than 40 people. DRAM. Thank you. Rogue Irishman, thank you for actually giving me something to test me, bro. I appreciate it. I like being put on the spot. I really do. I truly do. So let's do DRAM. I don't know what that is, but we're going to find out. DRAM. Round Hill Memory ETF. Okay. This is on CBOE. Oh, man, this chart is super gappy, bruh. But guess what? Still works. Still works. All right, so here you go. This is all it comes down to. You have to uphold, technically, we'll say $50. $50 is your most major and critical support level. That means that you can ultimately have a $10 drop. I don't think you have true institutional support until you get down here with this gap fill, period, right? You have some massive, massive support right here. 3.6 million in contract volume. You're getting support right now, right? And you can kind of see how this has 1.79 million in contract volume right here. This is almost 2 million in contracts, which means that you've got, we'll do the math. Just a cool $100 million in support right here, just from 54.60 to 55.20, so a 60-cent range. Now, here's your issue. You're going to run into some serious resistance right here at $60, okay? It's going to start at 60. It's really going to end at about $60.60. You had 3 million in contracts that traded right here, okay? Period, right? Now, look what happened, though. This is what's happening right now. You're trying to get back into this gap. Now, where is your most ultimate level of support? Dude, it's right here. It's at 40, unfortunately for everybody. It's from $42, call it $42 to about $42.80, right? So about an 80-cent range. These are all fair value gaps, okay? But look at how this plays out, seriously. Like, when I tell you, like, look at how this plays out. Look at what it did. Boom, 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 boom. Right? Then it comes back in. It tests those order blocks that it created here. Boom, bounced up. Now it's testing the order blocks again. You might see a bounce. It just depends, right? Ultimately, you got to uphold $50, 51 bucks. And ultimately, you got to get up above $60. And then you're going to see a pretty decent sized push up. We'll zoom out. I'll show you what the longer term resistances are going to be. Yeah. This is a stock, so this has a shit ton of gaps everywhere, unfortunately. Yeah, dude, I mean, you get up above 60 bucks, like, dude, you're probably coming up here to about 74. I mean, at the very least, you're coming to 67. That's where the fair value gap starts. And really, all it is just a gap in the chart. So you're probably going to move past and through that really quick. My target would be 72 bucks if you can uphold and break all of these market structures to the upside from the 4-hour, the 15-minute, the 30-minute, and the 1 hour. Boom. Copper higher time frame. Time frame doesn't matter, bro. Time frame doesn't matter. I'm just going to be honest with you. This stuff, the way volume just comes in, right? Like, it doesn't matter what time frame it comes in on. It'll tell you, but it doesn't matter if I'm showing this on a daily chart, a 1-hour chart. You're going to see the same data, period. So that's what we'll do. Man, I appreciate you, Rogue Irishman. I appreciate you. So yeah, common misconception is that the higher the time frame, the more applicable it is. That's a fallacy. That's a fallacy. Anybody that's telling you that, they literally don't know shit about anything. And you should probably just not listen to them, because what comes down to is volume. All right, so we called the absolute bottom naturally. Of course it did. The indicators called the absolute bottom with the triangle inside of the box on copper. And then granted, of course it did. Called the absolute top. We'll zoom in. Of course it called the absolute top on copper and called the bottom. Of course it did. I mean, why wouldn't it, right? Why wouldn't it? Boom. No divergence here, which is unfortunate. So there was no divergence here, but guess what? There was one here. Boom, boom, right? There was one here. Where were the old highs? Right here. Yeah, there was a divergence right there. I'll use the line just so that it makes it a little bit easier. But you see from high to high, divergence, bang. Right? You're on support right now. That support is probably not going to hold. You've already eaten through pretty much the entire thing. It's really, really weak support, 562 in contract volume. You're looking like you got some pretty decent resistance above. I'm going to show you. We'll read it. 356 in contract volume right here. Not huge resistance, but, you know, big enough, right? Front ran the order block here. Pretty decent trade. 2.5 in contract volume here, 2.5K. If you know copper, you know that that's a shit ton of volume. Bang. I mean, you're not getting above probably 1396 anytime soon because of this order block set. You're probably going to break this one down, and then you're coming right down into 1350 all the way down to about 1355, something like that. But once you really lose like 1350, you're coming to about 1330, and then you've got decent support there. You got decent support there. It's not huge. Your real support's going to be right down here and right down here. Your real support's going to be right at $1290 up to $1,308. So you got a $20 range. Xander Bay 5808. Does that make sense why this is your highest level of support, right? Because this is where the highest amount of volume came in right here to the long side, okay? And that is why this is your highest level of support. You've still got support here. Don't get me wrong. Like, you could get support here. And I mean, this thing does a really good job, right? Right there. Triangle inside of the box, boom, called the bottom, right? Triangle inside of the box, boom, called the bottom, right? Triangle inside of the box, boom, called the top, right? So my guess is you're probably going to run through this right here. If you bounce from here, you're probably going to reject here, and then you're going to basically run through this, come down here for the 1 hour lows, okay? And I'll show you what that means. Boom, boom. Your 1 hour is actually in an uptrend right now, but if you break this level right here, 1359-ish, 1357, that's where you become 1 hour and below is going to be in a downtrend. And then once you break 1337, which is a very tight range to be in, you are now breaking market structure to the downside on a 4 hour chart. Yeah. It's pretty simple. It just like lays everything out so beautifully and so simply for you just by having the indicators, dude. Like, you're a swing trader, pro. You're a swing trader. You're killing it off of these indicators. You're a long-term investor, bro. You're timing the tops and bottoms of everything, right? You're a day trader. You extract money from the market every single day based off of this. And as you can see, you do not have to niche down into one asset with these. You can find your perfect trade setup every single day because you could look at 50 assets. Look at how many assets I just did like high level TA on. Go and watch other YouTubers and tell them to do the analysis in 1 hour on all the assets that I just did and give you the real levels. And then also mix in strategy, risk to reward, set trades up, do all that stuff. And tell me if is quality like that. And I'm not saying that mine is better quality because I'm better. I'm saying mine is higher quality because I have the access to higher quality tools that automate it all for me, right? You saw As soon as I pulled up the copper chart, boom, it loads on the chart in 5 seconds. You saw as soon as I pulled up, what was it, DRAM, 5 seconds, everything I needed to know right there on the chart. I'm able to make decisions. I'm able to move nimbly through the markets. I'm able to time the tops and the bottoms. I'm able to get the best trade setups. I'm able to do all of this, right, in the fraction of a second. And I'm not relying on a trend line. I'm not relying on a bull flag. You didn't see me put one moving average up here. Why? Because none of those things matter. None of those things move markets. The real thing that moves the markets is the volume and the velocity of the volume whenever it comes in. By tracking the institutions, you understand what's going on in the market and you understand exactly how to position, right? Now, if you subscribe to the indicators, obviously I give you all of the strategies, the best strategies, some of the ones that I'm laying out on these calls. You have targeted trainings on those exact strategies inside of your user dashboard as soon as you sign up for the indicators, and you have full-on trainings too. So try the indicators out for $7, bro. That's all I can really say. Like, if you want to actually make money in these markets, the way that shit is trending now, you have to have access to a better system. You have to have access to the real data and mathematics that are behind the market. And I have automated that mathematics and that system for you. So take advantage of it. Try it for $7 for your first week. They're normally $59 a month. It's not expensive. Try them for $7 for a week. Let me know if you guys have anything else for me in the comments section, man. I appreciate everybody seriously so much for showing up. If you enjoy this content, please give it a like, dude. Share it. Like, tell me in the comments section if these streams are helpful to you, if they're actually doing good things for you. And if you're using the indicators and you're following the methodology, man, let me know that too. Because like, very few people ever say anything about it. They just kind of go into the Discord and they're like, yeah, I just made a bunch of money. And I'm like, yeah, great. What about it did you like? Well, I made money. All right, cool. So if you're using the indicators and you have any insights into them for other people, man, please drop them in the comments section, dude. I appreciate you all so much. Everybody have a wonderful day. I will see you tomorrow for the stream again, probably around 10:30 a.m. By the way, I'm going on Discover Crypto on Thursday for a stream at 10:30 a.m. So I'm going to still plan on doing my stream on my channel. It just might be an hour later. But if you want to go and watch the analysis in the crypto markets, I will be on Discover Crypto as well. That's a pretty big channel. I think they're like 1.2 million subs or something like that. So yeah, go over there. So show some support, man. See you all soon. Everybody have a wonderful day. Peace.